welcome to this another episode of ECCB Connects. Today we'll be talking about how the ECCB generates its income and how the ECCB keeps the EC dollar strong so that you can conduct your financial transactions, especially your overseas business, with confidence. We have with us Mr. Niall Pistana, Deputy Director, Banking and Monetary Operations Department. Niall, welcome to ECCB Connects.
Thank you very much, Shamalan.
Now, the ECCB does not operate like a commercial bank where persons come and make their deposits and get loans. It also doesn't operate like a regular business where customers come for goods and services. But how does the ECCB generate its income?
The short answer to that question can be reduced to just one word, which is interest. The bank makes the lion's share of its income on the interest it makes on its investments in the international securities market, in particular the bond market. So everyone's familiar with the concept of lending. You go to a bank and you take a loan to purchase a house or a car. Similarly, what the ECCB does is we essentially are lending money to foreign governments, in particular the United States government. So we loan them the money, and in return they pay us interest for those funds. And that's how, in general, how the central bank makes its money.
Where does that money come from, the money that the bank invests and lends?
It's a very good question. So the source of the funds that we invest, the source of those funds come from the inflows of foreign currency that flow into the currency union, right? So what you have is economic activity here in the union that generates or attracts foreign currency. And here I'm talking about a specific activity. We're talking about the export of services and goods. So our citizens here have businesses, and they export the goods produced in those businesses, and in return they are paid in foreign currency, and that foreign currency flows into the region, ultimately ended up in the commercial banks and with the central bank. There are other ways in which we attract foreign exchange as well. When the governments are given grants or loans in foreign currency, those loans and grants are also added to our foreign exchange currency inflow. Additionally, we all have friends and families living abroad, and sometimes they would send foreign currency home. Those inflows are also additive to the foreign currencies that flow in. So what happens is that those flows flow into the banks, and with our interaction, ECCB's interaction with the commercial banks, the foreign reserves accumulate, and the central bank invests those foreign reserves on the international market, generating an income for the institution.
So with that, the citizens do have some influence on the level of foreign reserves in the region, but how significant is that influence?
Very significant, very significant. If you think about it, our largest industry is tourism. Right, that's where the lion's share of the income coming into the region is in foreign currency, right? So the ability of our citizens to create businesses that are attractive, that are competitive, is a direct positive influence on the amount of foreign currency that we receive. So the citizens have a big part to play in generating the foreign currency that creates the foreign reserves that the central bank then invests and earns an income on.
Why is there a need to have this pool of foreign reserves?
Another good question. The foreign reserves don't exist simply for the ECCB to make an income. Actually, it's a legal requirement stipulated in the ECCB agreement of 1983, which is the legal framework which governs the operations of the ECCB. In that agreement, it states that the central bank is required to hold 60% in reserves of the currency in circulation, so notes and coins in circulation, plus other demand liabilities of the central bank, right? So we're required to hold that amount.
When you say demand liabilities?
So demand liabilities is just a word for deposits, cash in accounts held here at the central bank, put there by the governments, the member governments and the commercial banks. So they are demand liabilities of this institution. So based on the agreement, the ECCB is required to hold 60% of the notes, that's the paper, and the coins in circulation, plus the demand liabilities of the bank. So in a simple example, if there are $100 million EC in terms of currency out there in circulation plus the demand liabilities, we're required to hold 60 million here in reserves, and it is that money, that 60 million, that we invest. It's important to note that although the legal requirement is 60%, the actual percentage in terms of the amount of reserves we hold here is in excess of 97%, right? So we're way above the legal requirement. And the reason why that requirement is there in the first place is it provides support to the domestic currency, right? We all know the notes that we use, it's paper money, right? It doesn't really have any intrinsic value. So you have to have a real asset behind that currency, right? And that's what the foreign reserves are, right? They are the backing, the support for the currency.
They help make the EC dollar strong.
Of course, because what you want is, customers going to a commercial bank and they demand US dollars. You want to be in a position to give them US dollars, exchange our currency for US dollars, and that's where the foreign reserves come in, right? They go into a commercial bank, demand US dollars. The commercial bank could then come to us, request US dollars, and we can sell them US dollars, right? That provides strength, confidence in the currency. And remember, the requirement legally is 60%, but we are at 97%, right? So the EC dollar is really quite strong, well backed.
Okay. You have a pool, like you said, 95% of the value of the currency in circulation. How does the ECCB manage this pool of foreign reserves?
Very, very carefully. It's a well thought out process. The risk that we're allowed to take with the investments that we make has been clearly articulated by the board and written, codified in investment guidelines, as well as in a performance benchmark that we have to meet. And when I say we, I'm referring to the asset managers that the bank employs. The bank employs 3 external asset managers, and these are internationally reputable firms.
So these firms assist with the management
Yes,
of the foreign reserves.
Exactly. We are very careful not to put all our eggs in one basket, so we spread it around, and we have these external managers manage these funds. And it's also extremely important to us that we understand what's going on. So we have an internal manager here that also manages a portion of those reserves as well. So you have the guidelines, which essentially codify the risk tolerance of the board, as well as the performance benchmark. And then you have these asset managers that are managing within those guidelines, trying to meet that benchmark return. And that's how we manage it. Now, overseeing all of that is a well thought out governance structure. There are a number of committees leading all the way up to the board. These committees are made up of senior officials here at the ECCB, and that provides the necessary oversight for the management of these extremely important assets.
Okay. You mentioned earlier that one of the key ways in which the ECCB generates its income is through investment in the international bond market. But we also know that since 2008, we've had the global economic and financial crisis, and a number of financial institutions have been affected by this. How has this crisis affected the ECCB and its income?
So two-part answer to that question. Remember, I would have indicated that the investments we make are of the highest quality, the highest rated governments and international institutions. That's where we place our money. So during the crisis, as you could imagine, there was an enormous amount of anxiety. Investors were seeking out the safest investments in which to place their money. Persons were not interested in taking any additional risk because of what was happening. So therefore, we would have seen a significant demand for the types of assets that we hold. And we all know what happens when something is in demand, price goes up. So in those years, in 2008 in particular, when you'd have had all this anxiety, the bank would have seen a significant appreciation in its investments as the demand for those assets would have gone up. That's the first part of the answer. Second part is that in response to this crisis, central banks around the world who represent the governments in which we place investments would have lowered their interest rates to near zero to support their economies, because what you had was a financial crisis that ended up with recession or contraction in economic activity in these major countries, the United States, in England, in Canada, and so forth. So to support their economies, their central banks would have lowered interest rates to virtually zero to encourage lending, right? Financing is now cheap, so people can start businesses much cheaper. What that means for us is the interest in which we earn our income, right, has declined dramatically as interest rates globally at generational lows, right? So our income has been negatively affected in the aftermath of what happened in 2008. So the direct impact is an appreciation in the assets immediately following the crisis, and since then a reduction in the income that we generate from our investments because of what other central banks have done in terms of lowering their interest rates to support their economies.
Niall, you have a very interesting, I would say, very important role to play at the ECCB in that you are one of the persons responsible for helping the bank generate its income. What do you find most interesting about your role?
The most interesting thing about what I do, from my perspective, is literally the challenge of keeping up with all of these developments. Every day brings something new. There's always some development somewhere that you have to keep abreast of, and then have to incorporate into the strategy you're going to use in terms of the investment of these funds, right? So it's a always on your toes kind of a job, right? It never gets dull because the news flow is continuous. There's always something happening. You wake up first thing in the morning, I check the news flow, see what's happening, because I know it could have an impact on the decisions I have to make during the course of the day in terms of pursuing our strategy. So it never gets boring. There's always something to focus on, something new to incorporate, something new to think about and discuss. And discussion is a big part of what we do. In terms of managing these reserves, so there's always, a lot of that happening, and that's very stimulating.
And of course, you have the challenge of ensuring that the bank generates enough income to take care of its operations.
That's true. That is true. That is true. So, and that has been a big challenge since, as we were previously talking about, since the crisis. And it's something that's going to require, I think, even further introspection and discussion here at the bank as we move forward.
Niall, thank you very much for speaking with us on ECCB Connects.
Pleasure to be here. Thank you.
You're watching ECCB Connects, protecting our currency, developing our region. And now for this week's financial tip.
Credit card bill in full each month. Don't use it for anything you can eat or will. You're watching ECCB Connects.
To view any episode of ECCB Connects anytime, any place, at your convenience, check out our YouTube channel, ECCB Connects.
We have come to the end of another episode of ECCB Connects. This week we chatted with Mr. Niall Pistana, Deputy Director at the Banking and Monetary Operations Department, about how the ECCB generates its income and how the bank keeps the EC dollar strong. Join us again next week for another exciting episode.